And the coronavirus is also shaking up Wall Street. After trading at all-time highs last week, the Dow Industrials have fallen more than 3,000 points, with that drop-off more than 10%. That pushes the index into correction territory. How could that affect Main Street? We want to bring in Chris Markowski. He's host of radio show Watchdog on Wall Street and president of Markowski Investments. We just saw there down 600 points. Chris, what does this mean for investors?
Be 200 points in the other direction. You're going to get whiplash trying to watch this thing over the course of the day, which again makes it complete exercise in futility. For your viewers out there that have their 401ks and their IRAs and their accounts, I'm telling you, please don't participate in this nonsense, because you can't. It's absolutely impossible to try to figure out which way the market's going to go at any point in time. You get news stories that are coming out left and right. I think the latest headline out there is that there's 8,300 people in California that are being observed. That information comes in, it goes into the software, because that's a lot of how Wall Street works nowadays. It's software, it's algorithms, and then it drives the market in one direction. Then, it's oversold. Guess what? The computers decide, hey, let's pull it in the opposite direction. It's all over the place right now. And for average investors out there with their 401ks, if you've got high quality companies, fundamentally sound companies in your portfolio, you're going to be fine when all's said and done.
Well, when it comes to equities, as people say, you know, the wise people like you is invest wisely for the long term. But when it comes to getting credit, those markets are a little jumbled right now, because a lot of companies that borrow money don't know how much risk they might be at, and a lot of the people that will buy those bonds from those corporations don't know how risky it's going to be. So when does that uncertainty stop? What kind of information do we need?
Well, one of the things that we have is that the fact that the Fed is they're waiting there in the wings. That's kind of hanging over the market as well, where we can inject more capital out there. Again, I don't honestly think it's necessary. I think that there's plenty of capital out there at this point in time. We're not seeing any issues with American companies in regards to basically lockups when it comes to commercial paper or anything like that we had during the financial crisis. You take a look at the economic numbers, some of the stuff that came out today with the United States, and everything's looking pretty strong right now. So as far as the bond market is concerned, yeah, we're seeing a ton of money obviously flow to safe havens and U.S. securities, which allows the United States to refinance a lot of debt at lower rates. But I'm not seeing any sort of lockup or anything like that yet.
You know, Chris, I want to bring in politics in just for a second here. You know, the president obviously acknowledging the fact that the threat of the coronavirus is having some impact on the market, but he's also claiming that, you know, the thought of potentially having a Democratic socialist in office is also driving some fears in the market. Is this a realistic expectation as to why we're seeing this drop on the stock market?
Well, I think you might be early on that. Listen, I'm going to be honest with you. I'm on the Leon Cooperman camp a long time ago. As Bernie Sanders scares me more than anybody else. I take a look at all the taxes that he wants to put forward, and I'm like, oh, my Lord merciful, how are we going to do this? I mean, it's just not possible. I have to sell my house, sell all my assets. Everything is going to get taxed, my clients included. So, yeah, that's going to be an issue, and we're going to be talking a little bit more about this probably after Super Tuesday, when things kind of shake out to some degree. We do have this other branch of government called Congress, which is supposed to rein the president in if they try to get out of control. And we're keeping our fingers crossed here so my tax rates don't go up to 80–90%.
Chris, I want to make sure people understand how this affects them. I mean, we're seeing what happens on Wall Street, and you seem to be saying, you know, steady as she goes. There are a lot of reasons stocks go down. But is there something they should keep an eye on to make sure that everything's still okay?
It's far, you know, as still okay. Basically, I take a look at jobs here in the United States. A lot of people like to focus on certain numbers like GDP. We just had the GDP numbers come out, the revisions done, and they were excellent. I'm all about jobs and the fact that you still walk around everywhere and there's help wanted signs here, there, and everywhere. And wage growth is coming up, especially at the lower levels. What we suggest people to do, this is always been our philosophy, is that you pay yourself every single month and you try not to pay attention what the markets are doing. If they're down, doesn't make any difference. You keep keep buying. They go down further. Guess what? You're paying yourself every single month. You buy again, and then you dollar cost average over time. And then, as the markets come back and the dividends play and you rebuy more, you're going to do well. And that's the only way, in my opinion, to make things work for the average investor out there.
Okay, so even as the market's going down, just continue your investing, that in the long term it'll be okay.
Absolutely.
Okay, Chris, thank you. Chris Markowski there.